What's up, guys? It's Rob here, and today we're going to be talking about AMC and the new stock Ape that's trading alongside it, as well as the seeming crash that's occurred. We're going to explain that away, talk about what's really going on, and deeply explain the new Ape shares for anyone who's curious about how they work and what they are. So first things first, we're going to start off taking a look, noticing that AMC looks like it's dumped tremendously, but that's not actually what's happened. What's actually happened is AMC ended up paying out a dividend this morning. Ape shares, ticker symbol APE, and these were given out to anyone holding a share of AMC. Every share of AMC that you held, you got one share of this. It trades for a value of $7.11, and AMC is currently trading for a value of $11. And if you actually look at what happened, when these shares went out, assuming that they're trading at a value of $11, $7, and AMC is currently trading at 11, if you add those two numbers together, going from the price that they were once at, it would actually have looked a little bit more like a gain from 7 plus 11 to $18. That's actually what's gone on in shareholders' accounts. Anyone who's holding AMC, you actually saw a minor gain on the day between these two stocks. It wasn't a big dip like a lot of people are saying happened to AMC. In fact, I mean, if you look at one of the headlines, it says AMC shares tank 30% as Regal Cinema owners warns of potential bankruptcy. That's not what's going on with AMC. That's a bunch of hooey that people are trying to sell you. AMC shares didn't actually dip, right? They decreased in value because they paid out a dividend worth about $7 per share. So that's what ended up going on with AMC. And for anyone who's curious about how these Ape shares work, I'm going to explain them in great detail and talk about what I think, some of the unfortunate negative effects of these could be and some of the positives. Ape is a dividend. So it was paid out as a dividend. Now you have a share of AMC and a share of Ape if that's what you had in your account. Or, if you had 1,000 shares of AMC, you now have 1,000 shares of AMC and 1,000 shares of Ape. And essentially, these are preferred shares, meaning that what's going to happen is if AMC ever were to declare bankruptcy, these shares are actually above AMC shares. The debt would get paid off first in a bankruptcy, then Ape shareholders would get paid out. So if you're holding Ape shares, you would then get paid out, and then AMC shareholders get paid out. So that's how this is working. It's essentially like a preferred stock. In fact, what Ape stands for is AMC Preferred Equity. So it's a preferred share, essentially, and in the case of a bankruptcy, they would be getting paid out. Anyone holding that would be getting paid out before AMC. Now, there are some downsides to this. Obviously, the price, right? When one share of AMC turned into two shares, right? One share of AMC and one share of Ape, then obviously the prices of both of those things were about cut in half, and the price of AMC doesn't look as impressive. So obviously, anyone who was hoping that the price of AMC itself would be soaring in the near future got their hopes dashed a little bit when we did see a big downtrend in AMC due to this dividend being paid out. The price did decline a bit. And things that I'm worried about regarding these Ape shares are that there could be some potential confusion. People who aren't going to watch this video, people who aren't going to look into it too deeply, are not necessarily going to understand what's going on with AMC. They're not going to understand what's going on with Ape shares. Potentially people who have never bought into the stock and were considering it might see headlines like this, like AMC shares tank 30% as Regal Cinema owners warn of potential bankruptcy, and decide to never get involved at all because they think the stock is just tanking, when in reality, like we showed here, they've actually experienced a very slight gain in terms of their value if you add together the value of the Ape share and the AMC share. So some people might be dissuaded from entering. And, there is going to be some confusion out there. A lot of people probably weren't keeping up too closely with what's going on, and they just see a massive negative number on their AMC position. They see that it's gone down dramatically. They're not maybe noticing that the new Ape shares have shown up in their account. It might take a couple of days for some accounts to actually see those Ape shares. And so people could be very worried, very confused. They might panic sell. And that's overall not going to be a good thing. Now, there is an upside, right? It's going to be easier for AMC to raise capital, and that's an upside and a downside potentially, because AMC, way back in the past, when they were initially pumping long ago, they did end up selling a bunch of common shares to raise a bunch of capital around this point. And unfortunately for them, but fortunately for shareholders, they ran out of shares to sell, and shareholders did not approve additional shares being sold, additional common shares of AMC. And so now they've implemented these Ape shares, which they have the right to sell more of these units in the future without additional shareholder approval. They currently have about 1 billion shares that they could sell. They used about half of that in this initial dividend, and they can use it to raise more capital. And each Ape unit may be converted in the future to one common share of AMC, making this once again similar to a 2-for-1 stock split. But essentially, this is going to let AMC dilute the shareholder if they wish to. And overall, in my opinion, that's not the best thing for AMC because AMC, I don't think too many people are betting on this company doing super well at a fundamental level necessarily. They don't think that it's going to start soaring based on the fundamentals. They don't expect that AMC is going to raise capital and buy up more movie theater chains and become a movie theater giant. I think a lot of people were hoping that they could squeeze this stock and push this stock up. And by enabling additional dilution, that's going to make the process a lot more difficult because there will be a lot more capital that needs to be infused to buy up all the shares of AMC and now all the shares of Ape. And so that's overall going to make it a little bit more difficult to squeeze. It will potentially help their business, right? If they're able to raise more capital, they can engage in more fundamentally improvement activities. But that's not what I think a lot of people were hoping for with AMC. Now, we do have a quote for the end of the day, right? Fool me once. It's from Stephen King. He says, "Fool me once, shame on you. Fool me twice, shame on me." And unfortunately, this seems to apply a little bit with this situation. You know, AMC in the past did kind of stop out or at least dampen a rally that was happening when they were selling common shares for a big profit, and it did help out the company. But now they're doing it once again, unfortunately, and they are, enabling these additional Ape units to be bought and sold and can potentially in the future be diluting shares, which I don't think a lot of Ape shareholders or AMC shareholders are going to like. And that's just my opinion. It's not financial advice. That's just what I'm thinking about the situation. And other than that, guys, keep in mind, not financial advice. I hope you have a great rest of your day. I'll see you in the next one. Bye.